there's a lot of weight in the system. A lot of it's a huge amount of capital. It's not like 2017 where it was light and you could push it around. And there's different demand and supply equations in the system now. It's not going to happen, guys. Sorry, but it's not. Not from what I'm seeing.
No.
And it'd have to be a black swan, or a white, reverse black swan or whatever, to do that. Just there's nothing out of the norm happening here. It's just very constant accumulation by long-term investors. It's looking healthy. It's not like this thing's going to blow out of the water. And there's not enough shorts in the system to squeeze it that fast. We've got longs in the system that need to cool off, and it has been. And so when you've got longs in the system, it's very hard for the price to rise quickly. Fast moves happen from short guys getting taken out and being forced to buy back. You think of miners, they're an infrastructure component, and they make money, and then they sell it to realize that money to pay for their OPEX. And the same thing with an ETF. They provide a service, and then they're going to make a fee, and they're going to sell it down. Same with exchanges, futures exchanges. Same with Grayscale. So it's all these different demand and supply effects now, and it's a new game. We didn't have that in 2017. Miners were the only game in town, and when they halved, this step change built a bullish run, and then we went into FOMO and mania, and there was no shorting to be able to, no real way you could short and cool down the heat of that run up. So yeah, it's different. I think it's very different, and I've been calling this the last cycle. A bit like Michael Saylor. It's going up forever, Laura. It just keeps going and finds its price discovery in a random walk. We did a 50% pullback. You may call that a bear. I may actually think you may have called that a bear market now, like a mini bear market, recovers in 3 months, rather than the standard Bitcoin bear market, which is like a 9 months or more. Typically, we've had 15-20% annualized yield by shorting the futures. They're actually taking the CMEs, or the futures ETF through their CME and taking the other side of that paper contract and buying Bitcoin, so you're fully hedged, because those two eventually settle together once it expires. But effectively, the yields from these guys doing the cash and carry, the yield making play, it becomes very attractive. Instead of going 15-20%, you can go higher, right? Like back earlier this year, I think the cash and carry trade was around 20-25% on the CME when things was really bullish. The cash and carry trade on Binance and FTX and those guys were even up to, I think, the 30-35 equivalent. There was like a 5-10% higher yield because I think a lot of the funds that were playing that game were actually regulated players on the CME in the US, and they were taking the yield. But now we've got this futures ETF coming in, and they're pushing that contango up, and there's more yield to be had, and that just translates to a lot more interest from institutional players that don't want to be exposed to Bitcoin, but they want to do something better than 5% from a junk bond, or even worse from a proper treasury bond.